right, so Angel and I are going to go over a couple things. I wrote down some things I wanted to ask him about. He wrote down some things that he's going to ask me about, and we're just going to kind of get each other's opinions on it. So the first thing that we both talked about was the Robinhood IPO. Obviously, everyone was highly anticipating this IPO, and it came out. Some people were very negative about it. Some people were very positive about it. How do you feel about the Robinhood IPO and Robinhood going forward?
It's hard to say, right? So, I mean, they make most of their money through flow. So, if that goes away, due to with the GameStop and AMC and all the meme stocks, right? Of the trading halt that happened, there was some backlash. So if the flow goes away, then I think they're in trouble. But I mean, I would say I'm neutral. Like, I don't have anything against Robinhood, but at the same time, I think there's a lot of platforms out there that are a lot better, that provide way more services. And yeah, so I'm in the middle. I don't love them nor hate them. They're just kind of there for me. Yeah. What about you?
Well, Webull is the biggest competitor they have, or one of the biggest competitors, right? I know some people that use Webull and they say that the services they give are 10 times more in depth than what you get on Robinhood. And yeah, I mean, I don't really like Robinhood. I think there's a lot of problems with their platform. Like I've told you before, I first started using Robinhood a couple of years ago. They've had so many outages. And when they have an outage, it takes them sometimes a day or 2 full days to get the system back up. I mean, I would argue that that's probably good for some people because they can't just panic sell stuff, but they have a lot of issues with their platform. And I mean, you saw the whole thing with GameStop, and they got a lot of pushback from that. But I think with them, for their business, I mean, it's all based on people speculating, and I just wonder how long that's going to go on. I mean, I think a big part of their business is just very, very small accounts. And I think most small accounts that are day trading stocks are probably going to get decimated over the next couple of years. I mean, that typically always tends to happen. So I think a big part of their business is very short term. I think they'll stick around for a long time, but I don't know that they're going to be as big as they are right now over the long term. But I mean, I saw Kathy Wood invested in it. I mean, she invests in technological disruption companies. She's got her ARK fund that's got all these sort of disrupting stocks, I guess you could call them. But to me, I don't think they're disrupting anything. I mean, I don't. People credit them for commission-free trades, but I mean, now every brokerage that I can think of gives commission-free trades now. They're not doing anything that's different from the industry anymore.
Right. Yeah. No. I agree. I don't know if their growth is gonna slow down that dramatically, to be honest, because I still think they're in growth mode. But I do agree that there's better platforms. Personally, I think Schwab, Fidelity, Vanguard, Interactive Brokers. I mean, you name it. There's a ton of options out there that are way better, especially if you're looking to trade options. So I personally get better fill rates with Schwab than I do with Robinhood. I downloaded the app just to try it, and because it's hard for me to say, oh, I like it, I don't like it, but I've never tried it. So I downloaded the app, but I get better fills on my Schwab account and on my Vanguard account. So eventually, I don't know. I think they'll stick around, but I don't think they're gonna become Schwab or Vanguard or Fidelity. I think there's top tier, and I think they're gonna be outside of the top tier.
Yeah, well, I think it's going to be tough for them to compete with the bigger players because I mean it is that most of their account sizes are extremely small. It's to me it's no different than DraftKings. I mean it's just a form of gambling. I mean I mean, you've seen the platform. I mean, the way they design it, it's very addicting. You go on there and you're looking at the stock movements on the charts they put on there. It's very addicting, and it's to me. I think I read that people trade options 88 times more on Robinhood than they do at Schwab. So to me, it's just like, I wonder how many accounts they start, how many people they start an account. They go in there, their money's all wiped out within a couple of weeks or a couple of months, and then they're probably never coming back. So that's the way I feel about it. But I think they also have a lot of regulation that could be coming in the future. I mean, they just paid a huge fine to FINRA, but I don't know. I mean,
Right.
you look at Kathy Wood. I mean, to me, she's never seen like a technology company that she didn't like. So I mean, when she endorses this thing, I don't know what to really make of that. But there's a lot of people that are very negative on it, and a lot of people very positive on it. But I guess we'll have to see.
Right. Yeah. No, I'm in the middle. I don't think it's going away, but I don't really think it's going to overtake. Like I said, what I would say are the big three, which is Schwab, Fidelity, or Vanguard. I think those two are gonna,
Right.
still be eating their lunch because I think they just have a better service, and so yeah, those. But yeah, no, I agree. I agree with what you
One
said.
last thing on Robinhood that I really don't like about them is you can't actually pick up the phone and call somebody. If you're having an issue with your account, I mean, why can't they have a customer service line? Right. I don't know. They've been having a lot of pushback on that in the past. I don't know why they can't do that. That really annoys me
Right.
about them.
So don't quote me on this, but I believe that they added some. Again, I don't know. I don't
Did
use
they?
Robinhood often
Maybe
enough.
they may have in the past few months. I know, like about 3-4 months ago, they definitely didn't have one. But I mean, maybe I missed that, but maybe they added it. But that was one
To
thing
what
that
extent,
really.
I don't know. But I mean, with Charles Schwab, I can literally call them 24/7.
Right. Yeah. I mean, that's a great thing. And especially, I
Like,
mean, if your platform's going to be having outages every couple months, I mean, you'd think, you'd have the ability to be able to call. But all right, I guess we can
right.
move on from that.
Cool. Do you want to talk about the Chinese stocks and the sell off and all the regulations that are coming down?
Yeah. So, I mean, I think the catalyst for it, I mean, I think some of the emerging market ETFs that are heavily weighted to China were down over 10% on the week at one point. I think they got a bounce on Thursday, but I think Friday was another hard sell off. But yeah, I mean, you're talking about a full correction within 2-3 days for for ETFs that typically don't move more than 1 or 2% in a day ever. And a lot of it was, I mean, the catalyst was obviously China. They basically banned for-profit businesses for educational services.
Mm-hmm.
Um, to me, I think the reason it affected China's stocks throughout the board is just I think it made investors sort of take a step back and realize that they have to give a lower multiple to Chinese companies because of how their economy can be influenced by the government at the in one day just from an announcement.
Right. Yeah. I mean, I don't think I would touch any Chinese stocks right now. Probably the only one would be Alibaba. And even so, it would be a very small, very small portion. But I do think Alibaba is just, it's a monster, as far as growth, revenue, all that. But again, it's a Chinese company. So, you got to take that with a grain of salt and know that there's a ton of risk. So I think that's the only one I would touch. But even so, like it would be, like maybe like 1 or 2% of my portfolio, and that would be it.
Yeah, I like Alibaba. I don't own it, but I think it's a great business. But it's like you can't put the same type of a multiple on Alibaba that you can on, say, an Amazon, just because there's a lot more political risk there. So you have to
Right.
take that into account when you buy it. I used to own Baidu. Uh, I think I lost almost 30% on that stock. I ended up getting rid of it the other day because I just thought there was a better place to have my money than that. I didn't. I wouldn't have been opposed to holding it through the sell off, but yeah, no, I mean it's tough. I mean that's just one of the risks of investing in China. Um, I mean, there's political risk investing anywhere, and I think there's a lot of political risk in the United States that people aren't accounting for right now. But I think investors are. I think it's just another reminder to investors that the Chinese government can step in and basically do whatever they want there, and you got to be aware of that if you're going to invest in any Chinese stocks or names or particular. I mean, really, if you're investing anywhere outside of the United States, I mean, I do think there are countries that are freer than the United States are, but right now, the way that our markets are regulated, our capital markets are the most transparent. But yeah, I think there is a lot more political risk in the United States system that people are overlooking right now. It seems like when you have announcements like this come out, then people finally take that step back and reevaluate.
Right. Yeah, no, I agree. Yeah, no, I don't think I'll be buying any Chinese stocks anytime soon. I
Yeah,
just I feel like there's plenty of opportunity in other places without that added risk of political insecurity.
yeah, it's a
And
shame
so
too because
I
I mean
think
the
I'd rather
Chinese
place.
economy really is productive, but it is. I mean, you have that added risk.
Yeah,
Um, but what can you do? I mean, that's part of if you invest in China, that's part of what you got to deal with. So
right. Yeah, I know, and it is a shame. I mean, that's a market with over 1 billion people. So I mean, there's a lot of opportunity there, but I personally can't be in there right now. Um,
yeah, it's tough. I mean, 7.9% GDP growth year over year for them. They reported last month. Um,
right.
I think they definitely become the biggest economy sooner or later. They just can't seem to keep catching up to us. But yeah, I mean, if you're buying any emerging market funds or any funds with exposure to China, that there's going to be this risk that you have to look out for.
Yep. Agreed. Yeah. What else you got on there that you want to talk about?
Yeah, so I wanted to not get so political, but I did want to talk about the. I don't know if you saw Biden wants to offer Americans $100 to get the vaccine. He does want to do it through state and local governments, but he does want to offer that. I don't really want to get too political about it, but just from like an economics perspective, I mean, what do you think about this? That I mean, do you think that people that are scared to even get the vaccine are going to not be scared? Like the $100 is going to outweigh their fear of getting the vaccine?
I don't think. Oh boy. All right. Let me make sure I phrase this correctly. I'm right there with you. I think if at this point you have not gotten a vaccine, you're probably not interested in getting one. And I don't think $100 is going to make you change your mind.
Yeah, I don't know.
A
I
hundred
think
dollars, $100 is not life changing.
yeah, I think at this point you basically, I mean, it's very polarizing. You have you know if you support the vaccines and people that haven't gotten it, you look at them as like they're a threat to society. And the people that haven't gotten the vaccine, it's like they're looking at the people who want them to get it as like they're oppressing on their freedoms. I don't know. To me, I mean, first of all, I don't know what they're gonna. I mean, if you already got the vaccine 2 weeks ago, can you like mail your vaccine records in and get a rebate on this? Or, I mean, isn't this supposed to be like something you're supposed to get every year? Or, but like, where are they going to come up with the money for this? I mean, they already don't have enough money for anything else. They still have to raise the debt ceiling even further. But I don't know. To me, it's just like they just want to throw as much money out as possible, and I just don't get it. Why? Like, if people are scared to get the vaccine, wouldn't it be better instead of putting $100 to pay them to get it? Wouldn't it be better to put some money into research so that there's more effective tests showing that the vaccines are actually effective and safe? I don't know. That's what I would think.
I
But
don't think I don't think it comes down to research at this point.
Yeah, I don't know.
And that's as much as I'm going to say on that. I don't think it comes down to research or anything like that. I think at this point, um, it's a lot about personal beliefs, and it is what it is.
Yeah, I mean,
That's so no, I too, I guess to go back to the original thing, I don't think the $100 is going to do anything. I think people that are going to get it already will probably just take the $100 as a plus, but I don't think that's going to change their mind. And I don't think that people that weren't going to get it are now going to get it and get the $100.
you think
So I
people,
think either way you're going to get it or not, but now you just get $100 or you don't. That's
yeah,
it.
you think people are going to hold out until they raise it to like 200, $500? I wonder if it doesn't, if they can't get people to get vaccinated, if they're going to start raising it. I don't know.
I don't know. I doubt I wouldn't do it to begin with because I don't think it's an incentive that's effective.
Yeah, I don't know. I just find it interesting that the best idea that they want more people vaccinated, especially with now we got the Delta variant going around. That okay, let's just throw $100. Like I think in New York City, Mayor De Blasio did something where like if you get a vaccine, you get a free Big Mac at McDonald's. It's like really like that's you got people eating Big Macs and I mean it's just like it shows you like everyone's health
I
concerns
feel
are
like a
higher.
Big Mac. I feel like a Big Mac would be more effective for the target population that
Yeah,
doesn't
because
want to get a
you can
vaccine.
go
$100.
you can go to Walgreens and get your vaccine, and then you go right down the street and then you show them your card. Now you get a free Big Mac.
Yeah,
I mean, I don't know.
I think the Big Mac's more effective than the $100. I'm not even joking. I'm
Probably.
serious. Yeah. Um, or maybe like what is it, Texas Steakhouse or something like that. You know
Yeah.
those
Well.
those fast food places that are still pretty cheap. I mean, it's not fast food; it's like fast
Yeah. Yeah.
dining. But
Yeah.
you can get a steak for like $12. I think that would be really effective.
Yeah. I don't know. I mean,
I don't know, but yeah, who
yeah.
knows?
We can move on.
Yeah.
What else do you got?
Did you see the Amazon pullback?
Yeah, I did. What was it down like 7% or
Yeah,
so on the lows?
yeah, I thought
Um,
so.
yeah, I saw they missed on. I didn't see the full earnings report. What did they miss on revenues by a couple billion or something like that?
Yeah, they
But
missed on revenue and they lowered guidance for the next quarter, or they didn't lower, but the guidance they gave was not as strong as what analysts were hoping to get.
okay,
So, but I mean, I feel like if you were looking for an entry point into Amazon, this was you know, your kind of chance to hop in there with a nice solid pullback. I think Amazon's going to be a beast for just the next 10 years. So
yeah,
I don't think one quarter is going to make or break them.
I think that I personally I think Amazon will probably struggle the next few years with trying to make new highs, but I think like really long term, I think that it's a great company. I mean, they once they come out with Amazon Fresh, I think that's going to be huge for that business. I think they're going to destroy 70-80% of the grocery stores in America. Um, it's going to take them some time to do that, and they're going to have to lose some money doing that. But I think they're going to take the overall market share of American grocery stores. They're offering 30% lower grocery prices than every other grocery store in America. So I think really the only stores that'll be able to compete with them would be the wholesalers like Sam's Club and Costco. But they're doing that. They're trying to get into the pharmacy industry where they can just deliver pharmaceuticals door to door to people. Um, yeah, I think if Amazon's getting in your industry, you have a lot of trouble coming. But I think it's a great long term investment. But I don't know that right now for me is the best time to buy it because I think they're incredibly dependent on consumer spending, obviously, and I don't know. I think I see that slowing down this winter, but yeah, we'll have to see. I wouldn't. It's not something I would be picky with either. You just get in here, and if you're willing to hold it for 10, 20 years, then don't worry about any short-term pullbacks.
Right. Yeah. No, I agree. I mean, I could see them making a good inroad with the pharmacy. I don't know about groceries, to be honest. Um, I mean, I understand that they can afford to lose money, but Walmart's not exactly a pushover. I mean, they got plenty of money and plenty of market cap to go around. And I also think, a big part of it is just that branding. I think if you go to different states, you're going to see a lot of different supermarkets that have loyal customers. So, Kroger's pretty big. So I don't know. I could definitely see them getting some market, share, but I don't think they'll take the whole thing. I mean, obviously they have Whole Foods, which is, whole paycheck, but yeah, those are kind of my thoughts there. But yeah, no,
Yeah.
I think you're right in the big picture. If you're looking for 10, 15, 20 years, I think if you put your money there, you'll be just fine.
Yeah, I mean, it's one of those companies where like if you had to take if you told me like you have to take your entire net worth and put it into one stock, what would it be? It'd probably to me be Amazon or Google. Um, just
Google.
yeah, just as far as what you can trust to be there 20 or 30 years from now. Um, I don't know. We'll have to see. I think they're trying to make their Amazon Fresh grocery store. It's supposed to be like a upscale grocery store, um, sort of like a Whole Foods, where like I don't know if you have ShopRite's there, but like ShopRite's like a very low scale grocery store. It's like it's cheaper, but it's not as like inviting. People that are willing to spend more money would be willing to go to other places. But then I think they're trying to offer the upscale, but trying to get the same price points as like the cheaper grocery stores, like the Aldi's. But yeah, I think they're trying to make it as automated as possible, so there's not as much labor, so they can save on costs. But yeah, I think as far as the whole Amazon business is going, I think they said that people are still their Amazon Prime members are still buying more than what they were buying this time last year. So maybe their earnings report wasn't as weak as anticipated.
Yeah. I mean, I think for me, the biggest thing is their cloud service. That's
Hmm.
I think that thing's going to be a behemoth. Them and Microsoft are really the two, and then Google is kind of like the like stepbrother that's just tagging along, but not really competing at the same rate. Um,
Well,
so yeah,
yeah, and then the other thing with I mean, Amazon was probably so oversold because all the other high tech growth names reported ridiculous earnings. So it was probably like, okay, they didn't meet like the bar was set so high that when they missed it by just a little bit, that a lot of people just oversold it. So
yeah,
we'll have to see.
yeah. Because I mean,
It
I could
might
have
come
seen
down.
I could have seen like a 2 or 3% pullback, but I don't think the numbers they posted, represented like a 7% pullback. But again, if you were looking to get in, I think you got an opportunity. If you're looking long term, so.
Right.
Um, but yeah, and then also, I was just kind of going through and just looking at everything that was going on in the market. Um, and as I told you before, I'm looking to purchase a home. Um, and so I was looking at houses and just the market in general, mortgages, things like that. Um, and pending home sales dropped in June. So I thought that was interesting. So, who knows where the market's going for the rest of the year, but at least in June, they dropped.
Well, I think it was like the housing market was so hot, it was due for a pullback at some point, right? Um, and I think a big problem with homes still is that it's still, even though the price of lumber has come way down, it's still overall all the materials is it's so expensive. Labor costs are so high. It's so expensive to build new homes that it's putting so much upward pressure on existing home prices. But I
Right.
don't know. To me, it's like I still think housing prices are really high. Um, Obviously, it depends on location, but I think most places housing prices are still incredibly high, and they're still reliant on extremely low interest rates. I
Hmm.
think interest rates are going to stay low, but um, if we do have a spike in interest rates, I think housing prices are going to come way down.
Right. Well, I mean, another big part is that we're just not building enough houses. And don't quote me on the numbers, because these are raw, rough ballpark figures. But from the article that I read, it's for every 1.5 million homes that are needed, we're only building one. So the supply is not there to meet up the demand of not just people that need house, but just the population growth over time. So obviously people are going to have to start overpaying for homes. But yeah, I do agree that rates are going to stay low for a decent amount of time. Whatever you want to call that, it's up to you. But um, I don't know. I don't think waiting it out is the best option, to be honest, because I don't see a housing market crash, because things are expensive, but there's qualified buyers and there's low interest rates. And yeah, so I don't think sitting on the sidelines is going to do you any good long term.
Well, I think two things. I think it's become so expensive to build new homes that there's just no margins there for home builders to even build them anymore. Um, it's it, and I think that because people are starting to worry about inflation, they're worried that rates are going to go up soon. So I think maybe home builders are looking at that and saying, okay, if rates go up in the future, there's not going to be as much demand to buy these new homes. So it's probably not a good idea to keep starting new projects right now. Um, but I mean, I think a part of it too is that rents are rising so high. We talked about this last week, but rents are so high that people just, I mean, and like we talked about, it's obviously it's cheaper to rent than own a home. But I mean, I think at this point rents are skyrocketing so high that people are just, look, I'm not going to pay five, six, $700 more for rent than what my mortgage payment would be on a similar house. I'm just going to buy a house. But I mean, I guess the fact that home sales dropped, it shows that people are you know, starting to not buy anymore. I mean, I guess I guess if you were going to relocate at this point, most people have already relocated. There's probably still some that are trying to, but for the most part, I think most people that were going to relocate because of the pandemic have already done it. That's probably a big factor there.
Right. Yeah. And also probably just because, with the vaccines and people kind of getting out more now, that before it was just like, well, I don't have anything to do. I'm just going to buy a house, which sounds crazy, but people were doing that, like, because it was something to do. But now, they have options. But yeah, no, I agree. I mean, I'm looking towards the end of the year, so we'll see what happens here the next, 4 or 5 months. But I mean, ideally, it regardless of what happens, I'm gonna end up buying a house. So it is what it is.
Yeah. I mean, for me personally, it's more of a lifestyle choice. I just like the idea that, you know, something breaks in the house, I don't have to worry about it. Um, I like the
Right.
flexibility of being able to move around. Um, and I'm also not a handy person. So anything breaks in a house that I own, I can't fix it. I got to pay someone to come fix it. So for me, it's more of a lifestyle choice. But I personally, I don't think I'd be jumping to buy a house right now. That's just me though. Even if I was looking to buy a house, I'd probably wait. But yeah, I mean, we'll have to see where housing starts go and where home sales go the next couple months. Uh,
Hmm.
I still don't think they've decided really if unemployment benefits are going to get extended or not. There's still no word on that, but I think probably if they don't get extended, that's going to be bring home sales down pretty significantly in my view. But personally, I have a gut feeling that they're going to extend the benefits
Well,
in
I
some
don't.
cases.
I don't think that would bring down the housing market because unemployment benefits is not the same as income when you're trying to get qualified for a mortgage. So I don't think that would bring down the sales, but I'm sure it could have a ripple effect and maybe put a small dent on it, but I wouldn't say it would be a significant impact.
Okay.
Um, but but we'll see. Who knows if they're gonna get extended or not? It's there's a lot of job openings right now, right? And people don't
Yeah,
um, want to take them.
I think not that I want to get too much into the job market, but I think there are a lot more people unemployed than there are job openings. But also, I think a lot of the job openings don't match the skills of the people that are unemployed. Um, I mean, a lot of the people that are unemployed, they lost their job. They were working in leisure or hospitality, and it's not really. I mean, a lot of those jobs are the ones that are coming back online, but then it's a lot of jobs that like a company moves from California to Colorado, and it's a tech company. I mean, they're not necessarily going to tap into the labor market where a person's been unemployed for 15 months because they don't have the skills to fill those job requirements. And just to get into like what I was going to ask you next, but like a lot of the supply chain issues that we're having is like a lot of people that are unemployed, they didn't work in logistics or supply chains. So I can't see those problems being fixed anytime soon. But I think that's one thing that I think they're going to have to, if they want to. I mean, I think the Democrats are more likely to try and extend the benefits, but yeah, I mean, I think personally they're going to have to if they want to keep consumer spending up. But I guess we'll have to see.
Right. I don't know. I feel like I said, I feel like there's a lot of jobs out there. I'm saying, would I be surprised if they extended the benefits? No, I would not be surprised. Would I rather that they didn't to an extent? Maybe somewhere in the middle, right? Maybe extend them for those that really need it, but
All right, so you're in the middle of it
there's
then,
people
middle
that,
of the road.
but there's some people that don't truly need them.
Yeah,
And obviously, you and I have the luxury to work from home. You can't do that if you work at a restaurant or a hotel. So I understand that, and I get that part of it. So yeah, the skill set is obviously something that goes into it, but um, I don't know. I feel like there's a lot of job openings, even for lower skills, entry levels, positions, which they're out there with, and Amazon's paying pretty good to jump in as a new hire. So
yeah.
I think
Amazon
last
gives
time I
pretty good.
checked, they were giving $1,000 bonuses.
Yeah,
So
and Amazon, you get healthcare on the first day. Um, I think the minimum for is $15 an hour, but I think in many cases when you first start with them, you're making more. Yeah, they pay very well. It kind of
yeah,
irks me when people say that Amazon doesn't pay well because they actually pay very well.
yeah. So at least I'm sure, obviously geography has something to do with it, but like at least here in Colorado, because a lot of times when I'm looking at companies, the stock and things like that, one of the things that I look at too is job openings. Like, do they have a ton of job openings too? Because they're just growing like crazy. Anyway, so I was looking at job postings here in Colorado from Amazon, and some of them were starting at 17, 18. And then if you were willing to work, overnight shifts, it was another $1 an hour. And then if you were willing to work, weekends, it was like another 50 cents. So like the base plus other incentives of working shifts that are not desirable get you up to like $21.
Yeah. I think $17, $18 is the new unofficial minimum wage anyway. I don't think anyone's going to take a job at this point with the cost of living going up for anything less than that. But yeah, right. I mean, Amazon, I think, is one of the best paying employees you can work for as an unskilled worker. You're not going to get. I mean, where else can you go where you start and on your first day you get healthcare as an unskilled worker? I can't think of any place that does that besides Amazon. I'm sure there are others, but it's very few.
Right. Yeah. No. I mean, I know people like to hate on Amazon, but I mean, like if you're 18, 19, and you're like, you know what, college isn't for me. I'm just gonna go to work. Making $17, $18 an hour right out of the gate, is not a bad gig.
Yeah, and that's one of those places where you put Amazon on your resume and it jumps out to people. It's. I mean, even if you're working in the warehouse, it's still you put that on your resume. And it's like, oh, this person worked at Amazon. Okay.
Yeah.
Yeah.
No, I agree. Any other topics that are you're dying to talk about?
Last thing I wanted to ask you about was just interest rates. The Fed made their interest rate announcement this week. It was expected to be between 0 and 25 basis points. It was. I mean, the Fed doesn't surprise the markets ever. So when when there's an expectation for a rate increase or rates to stay the same, it does. But we still have interest rates at 0. Do you think interest rates are ever do you think the Fed's ever going to raise interest rates?
I think probably mid to end of 22. That's just kind of like my rough estimate.
I think
so. Like next July-ish will be when they'll start going up.
Yeah, I mean, interest rates have practically been at 0 since 2000. So, we're going on the third decade here of 0 interest rates. I mean, they've been higher than that. I think the highest they've gone in the last 2 decades was like 2.25. Something. I mean, I just don't see. I don't know why. I mean, at this point, it seems to me the Fed will never raise rates, no matter what they want, no matter what happens. It's odd because like their excuse for not raising rates is we still don't have maximum employment, but there's 9 million job openings, and you have earnings season. I mean, aside from Amazon, which didn't miss earnings by much. I mean, every other company is beating earnings expectations, and they're still saying that we're not at a place we need to be, where the economy still needs support. I think to me, they're never going to raise interest rates. I can't see it.
I think once the Delta variant passes, people feel more comfortable. And we can, and I use air quotes, relatively safely predict that the pandemic is behind us, right? No more variants somewhere. I think that's when interest rates will start to go back up. But I mean, I wouldn't say that's, you said they've been basically at 0 the entire last 20 years. I wouldn't say that's completely accurate. I mean, there were some years where they were at 4 or 5%. a few, not many, but overall, yes, I agree with you 100%. Super low rates over the last 20 years.
Yeah, I
Not
think
gonna argue that.
over the past decade, the highest they've gone is 2.25. I think in the prior to the 2008 crisis, they did. You're right. They went to I think 4 or 5% at the highs.
Right? Yeah,
But it
they
was a
hit.
very short period of time, and yeah, I mean the thing is they couldn't even. I mean, it's like how high. I mean, if inflation is 8% right now, how? I mean, they're what are they going to raise rates to 5% again? I don't think that's even possible. I mean, rates would have to go higher, but I think people forget in the 1980s, interest rates went to 20% to fight the 1970s type inflation. Um, I don't know. I mean, I can't. How can they even get anywhere close to a normal rate interest rate?
Man, I would be buying. I'd be 20%. I'd be buying bonds. Woo.
Right.
Um.
That's the problem, right? The higher interest rates go, the more demand there is for bonds, and the less people buy stocks and real estate. And it's kind of like
Right.
you can't raise interest rates and keep housing and stock prices propped up at the same time.
But the thing is, that shouldn't be their concern. Like the stock market should not be the concern of the Fed. Like I will die on a battle on a hill over this argument. The Fed should not be concerned about the stock market.
Yeah, I agree. I think it is a huge concern for them. I don't think it's supposed to be, but I mean they're supposed to be independent too, but apparently Powell talks to Biden all the time. I
Right.
mean, shouldn't that be illegal if they're supposed to be independent? Why are they even talking to each other? Right? Like the Fed's not
Well, I
supposed to
don't
help
think, first of
people.
all,
Yeah, go ahead.
I don't think this started like 6 months ago. I mean,
No.
the Fed's been talking to presidents for years. I mean, the Fed was talking with Bush during um, during the crisis, the financial crisis. So it goes way back, and it's both parties. So I don't think that's a new thing, but yeah, no, I mean, I I think at least for the next year, interest rates will probably remain the same, and then July 22 to and second half 22, I think they'll go up a little bit. I don't know how much, but I think they will.
Yeah. I think the Fed will start talking about raising interest rates to try and calm fears of inflation. But it's my view. I don't think they're ever going to raise them until the market basically forces them to raise them because they just. I mean, the problem is once you try and fight inflation, if it's already occurring and then you try and fight it, it's like you can't rein it in. It's you got to get ahead of it, you know. Um, but I mean, we see. I mean, earnings are surging. You know, consumer spending skyrocketing, and the Fed still is not. I mean, again, it's like even if you had an interest rate rise of like the first time they're going to raise rates, they'll probably only raise them by a quarter of a point or a half a point. It's like, what is that going to do? That's not normal. Like normal interest rates should be 7, 8%, right? I mean, they need to be high enough to convince people to save money and not borrow money to buy a bunch of consumer goods. But I don't see how they'll ever get back to a normalized interest rate. To me, it's like kind of like once you start going down the road of 0% interest rates, there's no going back without having price resets.
Yeah, no, I mean, we'll see. I think both of us, can guess at what's going to happen, but I think the Fed's gonna, at the end of the day, do what it thinks it needs to do. So yeah, I honestly would not be surprised if they did or if they didn't. Either outcome, I would be like, okay, yeah, doesn't surprise me. So I feel like at this point, I can't predict what they're gonna do. So my best
Okay.
guess is that it'll go up in a year, but if it doesn't, I wouldn't be surprised. I just feel like the Fed is just I can't really get a good feel for what they're gonna do.
Yeah, me personally, I don't think they're ever going to raise interest rates, but I think that I think Jerome Powell and the Fed as a whole, I think a lot of people are saying, like, why are they not raising rates if inflation's going on? I think the Fed knows exactly what they're doing. I think that they know that there's so much credit in our economy that I mean, if they raise rates, I mean, we have 10.5 trillion corporate debt. We have what, 29 trillion now in national debt. I can't even keep track with it. It goes up so fast. And then we have $950 billion of credit card debt, and and then 1.7 trillion of student loan debt. Um, I mean, what would happen if interest rates start going up and it costs, there's no more credit available? Um, to me, it seems like the economy is so dependent on consumer spending that if the Fed raises rates, then that's going to go away. And I think the economy would go with it. But I mean, yeah, we'll have to see. I don't know what their plan is over the next couple of years, but
Yeah, I mean, I don't think a small increase would just, completely make everything come to a stop. I think there's a ton of liquidity out there right now, like a ton of liquidity. So, a few basis points, I don't think would make the whole thing come to a stop. But I mean, would it slow down? Sure, but I mean, economies are supposed to be, freaking cyclical. So I don't think that's a bad thing. That's just me. But we'll see. I mean, yeah, like I said, we'll see what happens. I think, obviously at this point, if you're investing, saving, whatever it is you're doing with your money, you need to, at least factor in interest rates and the Fed, before you make any decisions on how that's going to affect, your investments.
yeah, I agree. I mean, we'll have to see. I think eventually rates will have to rise. It's just a question of whether the Fed or the market's going to make them rise by the market not buying bonds and forcing bond yields up. But yeah, we'll have to see. But that
Yeah,
is a
I
huge
mean,
risk. Like
I
we talked about the political risk of investing in China. I think that's a huge political risk of investing in the United States. That if rates do go up, there could be some pretty heavy corrections.
right. I look at those corrections as opportunities.
By the dip.
Right. Yeah. I mean, I'm in this for the long haul. So that's just kind of my view on it. But yeah, no, I think bonds are, man, I would not be touching bonds right now with the 10-foot
Yeah,
pole.
yeah,
But
nobody
that's
is.
just me.
The only the only
I mean,
the only buyer of bonds is the Fed. And no one's buying bonds. You
yeah.
can't buy bonds.
I mean,
Buy a 10-year treasury, you get 1.2% interest and inflation's 8%. I mean, what kind of an idiot would do that?
yeah. Yeah, no, I mean, yeah, I think right now, honestly, the way I'm getting some yield is because I prefer growth stocks than over dividends. So I've just been, selling covered calls to get premium, and that's how I get some yield out of my stocks. But yeah, no, I think, man, I think bonds are a sucker's bet right now.
Yeah. Yeah, we'll have to see if they want to fight inflation or they want to continue to keep rates low. I guess we'll have to see. The rate
Right.
forecast is the next one is 2023. So it's a long ways away. Anyway, you got anything else for me?
No, I think we kind of covered everything we had on the agenda. I think I always enjoy this because obviously, we have pretty similar views on some things, and then other things we don't. So
Yeah.
I always like getting the other perspective.
Yeah, no,
But
it's
I think
good.
we got everything for today.
Yeah, it's good because we're definitely on like opposite sides of the spectrum for some things, other things we agree on. But Yeah, I mean that's it. It was a relatively quiet week, other than those few things. But yeah, I think that's it. I guess we'll wrap up, and maybe in a week or two we'll do another one of these. But
Yeah.
if that's it, I'm gonna cut out.